Welcome, options traders. Hello, everyone, and I hope everyone had a fabulous 4th of July weekend. And to continue on with our talks about technical analysis, I thought I would post a video here on the volume-weighted average price. This is not normally one I would bring up this early on in the mix of technical indicators. It is important. It does have its place, but it came about as a request from one of our traders right here in this group. So I thought, hey, why not? Let's take a look at the volume-weighted average price and find out how you can make better decisions by using this technical indicator. So what is the volume-weighted average price, or as it's pronounced, VWAP for short? Well, as the name implies, it is simply the average price of the stock weighted by volume. Now, of course, the big question there is, what does it mean to be weighted by volume? So we'll take an in-depth look at that in just a moment. But it is a lagging indicator. All averages are. And in fact, with this one, the more data, the greater the lag. It is mostly used for intraday analysis. So VWAP usually resets at the beginning of each trading day and then obviously ends at the closing bell. So it's just used for analyzing prices during that trading day. One of the key uses is to identify liquidity points, and you can also identify the quality of your executions. So to make sense of all of this, we first have to understand what is a weighted average. Well, rather than jumping right in and looking at the weighted average of prices by volume, you got dollars, you got cents, you end up with big numbers, it gets a little confusing. So whenever possible, I always like to use an example that is outside of the industry that makes things a little easier. So think back to maybe when you were in school and you're taking tests. I know, not a good thought, but let's pretend that you're in a class and you've got these scores here, and you've got an 80 and a 90 and a 100. These are your three test scores. Well, what is your average score? We can look at it in a number of ways. First, I could say that each of these numbers is separated by 10, so they're equally distributed, and therefore the center value of 90 is your average. We could also add up all three numbers, get 270 divided by 3, we'd get 90. This is what we would call a simple average. Add up all the numbers, divide by the number in the group. But technically speaking, even a simple average is a weighted average. Because what I could do is I could look at this in this way. I could say you have a score of 80 that occurred 1/3 of the time, you scored a 90 1/3 of the time, and you scored a 100 1/3 of the time. So if we look at these here in yellow, these numbers are what we would call the weights. And so each score is equally weighted, so that's why we typically don't think of it as a weighted average or even go about calculating it in this roundabout fashion. We would just add up the numbers, divide by 3. Mathematically, it's the same thing. But you can see that if I took 80 times a third, plus 90 times a third, plus 100 times a third, I would still get 90. So a standard regular average is technically a weighted average. So when do we really use a weighted average? How is that different? Well, let's go back to the three scores, 80, 90, and 100. However, let's say we dig a little deeper and we find out that you received an 80% on 7 different tests. You received a 90 on 2 different tests, and you got a perfect score here of 100 on just 1 test. Well, now you've taken 10 tests. And it should be fairly obvious that you shouldn't expect your average to be 90. Why? Because most of the weight, 7 out of those 10, received an 80. Your score intuitively should be closer to an 80. So if we go and use that same calculation, and I say you received an 80% 70% of the time, so that 0.7 would be our weight. And then you received a 90% 20% of the time, or 2 out of those 10 tests. And then finally you received a 100 10% of the time. And if we multiply those out and add them up, you get 84. So notice that this score here of 84 is much closer to 80, and that's because the bulk of the weight, 7 of the 10, rests near 80. That 90 and 100, yeah, they were higher scores, but they didn't occur that often, and so it only helped to pull up your average a little bit. Now, of course, we could take the long way. I could take 80 plus 80 plus 80 and do that 7 times, plus 90 plus 90, and then plus 100. Add them all up, divide by 10, and you'd get 84. So again, a simple average is just a weighted average, but that will help you to understand what it means when we say that we are weighting prices by volume. We're going to attach each of those stock prices to its corresponding volume. Now, to do that with VWAP, they go about it a little bit differently. Mathematically, it's the same thing. But just to show you what's going to be happening here shortly, let's go back to our 3 test scores here. I could calculate it in a different way. I could say that I received an 80 times 7 tests, or I got, let's say, 560 points. And then I received a 90 on 2 tests, or 90 times 2 would give me 180 points. And then I received 100 on 1 test and received 100 points. Well, if you add those up, that's 840 points. But it was 840 points across 10 tests. So look what happens. If I take 840 divided by 10, I land right back on that average score of 84. This is the method they're going to use for the VWAP. Now that you understand the basics of what VWAP is doing, let's take a look at an example. As I said on one of the beginning slides, VWAP resets at the beginning of each trading day. And technically, a true VWAP uses what's called tick data, or every single trade that occurs during the day. So to keep it simple, let's assume that the very first trade of the day was right here at 99.95, and the second trade was at 100, and the third trade was at 100.05. Just as with the test scores, you might be led to believe that the average stock price here was 100, and that would be true if we were just looking at the prices. However, to get a better feel of the average, we need to weight it by the volume, or in our example, the number of tests that you took at each of these levels. So let's say that the volume on the first trade here at 99.95 was 10,000 shares traded at 99.95. It doesn't necessarily mean it was one trader. Could have been 2 lots of 5,000, but the point is the very first trade executed was for 10,000 shares at 99.95. The second trade was a $100 price, but it was only for 200 shares. And the third trade was for 100.05, but it was only for 100 shares. So how do we calculate VWAP? Exactly like we did for the tests. We're going to take the price times the volume. So let's take a look at the first trade here. Multiply those two numbers out. We're going to get 999,500. Second trade, 100 price times 200 shares would give us 20,000, let's just call them points. And then for the third trade, 100.05 times 100 would give us 10,005. So just like we did with the tests, we're going to add up all of these points. In this case, we have a little over 1,029,000 points. However, we had a volume of 10,300. So we got this 1,029 figure across 10,300 shares. So we just divide those out and we get 99.952. So even though at that third trade the price of the stock was 100.05, the VWAP was 99.952. It was only slightly higher than the very first trade. Why? Because the bulk of those trades, 10,000 shares out of 10,300, took place at 99.95. That gives us more of a true sense of where the average really lies because we've weighted it by the volume. Now, the problem that you have with true VWAP data, which remember is technically at the tick level, trade by trade, is that there are a ton of trades that occur throughout the trading day. A actively traded stock could potentially have thousands of trades in the first minute alone. And because there's 6.5 hours in a trading day, or 390 minutes, that's a lot of data. And that means it can be very intensive for the computer in terms of resources, in terms of the amount of computer memory and storage that it takes. So just for example, let's take a look at Microsoft right down here on the E-Trade platform. And we're looking at time and sales. And over on the left, you can see the time, price, and the number of shares. And so this is at the tick level. We're looking at every single print on Microsoft. And actually, even technically speaking, this is really time-based. They're just very small windows of snapshots, but getting pretty close to the tick level. And you can see a lot of these trades going off here are for 100 shares, but it's always fun to watch things like Microsoft. Every once in a while, you'll see some in here for in the hundreds of thousands of shares. But there's one for 400. But this is exactly how they're coming up with the VWAP. Price times the volume. Just take a running total there, take your running total of the volumes, divide them out, and there's your VWAP. But the thing that I just want to emphasize right now is that a true VWAP calculation is rarely used on a platform because the amount of calculations just starts to grow exponentially. It could actually kind of tap out your computer's resources. So because of that, most platforms use a little tweak to the VWAP. So what most platforms do is they look at a period of time, and you can usually specify it. 1 minute, 2 minute, 5 minute, 10 minutes, something like that. It's going to take a window of time. And during that window, it's going to find the high trade, the low trade, and the close. Now keep in mind when I say close, that's not the close at the closing bell. It's just the last trade during that window. And then we're going to divide that by 3 and get the average price. Or sometimes if you read about these, or even in your platforms, it might show what's called the typical price. They call it the typical price just so that it delineates it from the average price of the VWAP. We're just taking the average price during that window. So here's what it would look like. This is just a hypothetical example in Excel. So over here I have 5 periods of time in 1 minute blocks. And let's say we're trying to figure out the 5-minute VWAP. Well, during the first minute of trading from 9:30, we had a high trade of 101, low trade of 98, and it also closed at 98. And so we take high, low, close divided by 3, we find the typical price is 99. The total volume that occurred during that 1 minute window was 15,160. So I take the typical price times the volume, and I get 1,500,840. So rather than just doing each tick level, they take an average and pretend that the typical price occurred at each of these volumes here. Then we go to the next minute window. Starting at 9:31, we had a high trade of 102, low trade again 98, but it closed at the end of that minute at 101. Take those 3 numbers, divide by 3, we get 100.33. The volume during that 1 minute window from 9:30 to 9:31 was 17,820. We take the typical price times the volume, and we get this 1,787,000 figure right here. And then we just do that for each minute window down here. So at the end of the 5 minutes at 9:35, how do we figure out the VWAP? I'm just going to take the running total. So for the first calculation here, I had 1,500,840. That was my typical price times volume. During the second minute, I had 1,787,000. Third one was 3,393,000, and so on. What I do is I look at a running total. So what this column does, it takes the 1,500,000. Obviously, that's going to match. But during the next minute, I had this 1.787 million. I'm going to add them together, and I get 3.288 million. And then during the next minute, I added another almost 3.4 million. That gave me a total of 6.68 million. So what this number is right here, the 6.68 million, it is just the sum of those 3. It's just a running total. So finally, when we get down to the very bottom here, this 12.5 million figure is just the sum of this entire column. I'm going to do the same thing for the total volume. Total volume, obviously, during my first minute is going to match. I take the 15,160 plus the 17,820. That gives me 32,980 at this level. And so I just keep working it all the way down. So this number right here, 125,710, is the sum of that entire column. So the VWAP is just saying what were the total prices that I got here, right here, kind of my total points, like when we looked at the test scores, was 12.5 million. However, that occurred across 125,710 volume. Again, just the sum of this entire column. So if I take 12,536 divided by 125.7 right here, I get 99.73. That is my 5-minute VWAP. Notice that it is significantly less than the closing price of 102 over here. So if we were looking at a real platform in real time, the current stock price would be 102, but the VWAP would be 99.73. So this would actually show that we're kind of trending up. The current price is much higher than the average. Of course, we could also look at individual VWAPs. At the end of the minute, I had a VWAP of 99. Now, this is a special case. It will always match your typical price, and that's just because your volumes match. But from there on, it starts to change. At the end of the second minute, I had a VWAP of 99.72, and so on. So if you have your platform set to a 1 minute VWAP, these are the numbers you'd be looking at. If you had it set to a 5 minute VWAP, that would be your first data point. It would just be showing you snapshots every 5 minutes. Well, why do we use VWAP? First of all, it's mostly an institutional tool, and it helps institutional traders with large orders. And they can identify if they've received good executions, if they're below the average price. They can also help to determine liquidity, to see if this might be a good price where we can put in a large order without moving prices too much. Interestingly, binary options, for those of you who trade them, I wouldn't touch them with a 10-foot pole for reasons I might talk about in a future class, but I know a lot of people do trade binary options, but they use VWAP to determine the underlying stock's closing price. And they do that just so that some institution can't come in here and artificially push that closing price up by dumping in a large order at the closing bell. Much harder to change the VWAP than it is to change the current stock price. So if you trade binary options, you're definitely going to see the term VWAP. So to put your VWAP on a platform, this is what you'll do. You'll click on studies. Most platforms work the same way. This is for E-Trade. And right here are your top studies, the ones you access most often. So if you don't see it in there, click on all studies. And in this large list over here in the V's at the bottom, you'll see right there is VWAP. And I can pick a color for it. I'll leave it at red. And if I click on save, you can see I'm getting this error message. It's going to bark at you down here, say VWAP is intraday only. And that's because I have my chart set to a 1-year chart. Remember, VWAP resets at the beginning of each trading day. So if you're getting some type of an error message, you need to put your chart to an intraday chart. Once I click on today, I'm looking at intraday candles, so each candle is representing some time frame. I'm currently looking at a 1-minute candle. That just means that each candle is looking at the open, high, low, close during that 1-minute window. I can change that. But since we're still fairly early in the trading day, I'm going to leave it at 1 minute so we get a lot of data on here. So these candles are from the actual stock price, but this red line is my VWAP. So let's say right here around almost 11 o'clock, Microsoft hit a bottom. And even though it was trending up through here, we were still well below the VWAP. So this might be a way that an institution would use this and say, we're going to place an order for 1 million shares. We don't want to move the market, but we've got a lot of liquidity here. I have lots of room where I could move this price up and still get an execution, or at least most likely, below the average price for the day. Another interesting fact about VWAP is that if prices are just oscillating sideways, such as Microsoft, here's where it opened, here's where it is currently, your VWAP is going to just trade sideways. If the stock prices are trending upwards, VWAP will be well below it. So you can see in here we could tell that prices were definitely trading up much higher than average. And if the prices are below, such as over here, then your VWAP will be above. So it just also gives you a nice visual to figure out where prices are trending. Let's try another one. Let's take a look at NVIDIA. So NVIDIA had a little similar pattern, was trading down off the opening bell, well below its VWAP, and then right around 10:45 crossed above, was trading above average, and now you can see has been trading above its VWAP. So prices are definitely trending higher. Even though you're seeing the prices dip right through here, overall we're still in a very large uptrend. Why? Because the prices are well above the volume-weighted average price. So a couple of points to remember about VWAP. There's 6.5 hours in a trading day, which is 390 minutes each trading day. And so your 1-minute VWAP will be close to the ending value of a 390-minute moving average. They'll be very, very close because both of them are using the last 390 minutes worth of data. However, remember that VWAP resets each trading day. Your moving averages do not. And so sometimes traders like to make comparisons between VWAP and moving averages. So if you're making comparisons, be careful to match your time frames and your data. So for example, at noon, you're going to have 150 minutes of trading time. You don't want to compare it to a 390-minute moving average. Why? Because you're going to be using averages from the previous trading day. So in that case, you would want to use a 150-minute moving average if you're going to make comparisons. So just kind of keep that in mind. You have to be careful about trying to match your moving average data with your VWAP data. But VWAP can be very helpful, especially for short-term traders. People are trying to figure out, is this a good time to place a trade? Are we below average or are we above average for the day? So remember, it's a very basic rule. If you get an execution below the volume-weighted average prices for the day, you got a pretty good fill. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course. If you're looking for some really good free information, please check out our Facebook trading group, Options A to Z. Just look us up under trading groups in Facebook. It's a free site, lots of great market commentary, free videos. We'd love to see you there.